the jury's out for a year, 3 years, 5 years. But it's an IPO. There's some volatility attached to it. I think his expectations around having a stable price going out, given all of the interest in this, is a little bit unrealistic. I have reason to be optimistic and reasons to be concerned long term. But I think overall, just getting out, having a public stock and seeing where it settles is a win. Is this a real stock price right now, or is this being supported by Morgan Stanley? I'm an efficient market theory person, and the vast majority of data suggests I'm right on that. So I don't believe in conspiracy theories and that one individual firm can hold up an $80 billion stock. And so when you look out now 3 to 5 years, I mean, well, let me just ask a question. So the past week, there's been this massive debate about, are they going to be profitable? All of these questions, do you think those questions are still viable, real questions? Absolutely. The thing that gives me pause is Earnest Research just came out with a report that showed that on the supply side, so drivers, a couple years ago, Uber had about 80% share where they would just drive for Uber, and it was 10% split and 10% just did Lyft. Today, that's 50% Uber, 25% just Lyft, and 25% both. So if you have kind of a swapping population of drivers on the supply, and then you have on the demand side people that kind of shop price on the app, you have literally the definition of a commodity market where both the supply and demand are swappable. They're taking steps to address that. So Uber just rolled out a rewards program. I'm using it. It's early, but I think it's a step in trying to deal with some of these challenges that they have. Leslie, what's your sense of what's really happening to the stock price here?
I mean, it's difficult to say, and Morgan Stanley never, and no underwriter would ever disclose and say, we are the ones behind this support here.
Right.
It's clear, though, when volume does start to tick down a bit,
right,
the underwriters do have more support, and, regardless of how you feel about efficient market theory, they have a mechanism in place that allows them to push that stock price higher,
right,
and their ability to do so is correlated.
How much, though, was this also
inversely
about the news that we got about labor, from the labor in terms of unionizing labor and the idea that they can't unionize? Because that did happen. That came out, on Tuesday this week?
Yeah. I mean, I think that was certainly helpful to the upside because, of course, a big overhang for that stock has been this idea that its drivers as contractors,
right,
and their business model is just dependent upon this idea that they're not actually employees. So that's an important part of it. You'd think you'd get an even bigger boost from that kind of news, though,
right,
if it really was making
John,
a big difference.
It's super important. If drivers were able to unionize, it would put further pressure on their margins, which is the big question and which is driving their losses today. I think longer term, the autonomy question comes into play. And again, Uber and Lyft both have a chip there. But short term, labor is a huge factor in this stock.
Is there an intersection between the efficient market theory and the greater fool theory? I'm serious. With Uber, are you sure that? How do you do an efficient market theory on something you have no idea about in terms of normal valuation metrics? And why isn't it that I hope I sell it to someone else who's stupider than me at a higher price? How do you know that's not it?
So I think on that, the market is very good at pricing stuff. But this is the
market's good at pricing stuff. That's why things can fluctuate between 100% on any given 3-month period because it's so good at pricing things.
Well, I think if you look at it, it's a factor of future discounted future cash flows, and it's a highly volatile thing. So having highly volatile prices is rational. I think the market in general is kind of bifurcating against these belief stocks, and Uber and Lyft are probably like that, where they're burning a lot of money, but their core asset is an incredible company that has world-class engineers, that's disrupting enormous markets. That if they figure all this stuff out, a la Facebook, a la Amazon, they're big, important companies of our future. But there's also a high risk on them, so they could be real disasters.
Nobody knows the future.
So it's a volatile stock. I think it's going to continue to be. Shorts are going to be all over it. There's going to be negative news stories all over it. But fundamentally, it's a great company. It's got great assets. It's disrupting a big space. I love it as a service, as a consumer. It's changed the world. you know, it's a great American success story. So is Lyft.